Be Wealthy and Smart, episode 989.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the market overreaction because we've had tons of volatility on Monday and Tuesday. And well, I think there's a good chance the bottom is already in and the worst is behind us. But we'll talk about why I think that. And what's going on today is going to be the Fed announcement. So the Fed is meeting and met yesterday and today, and they are going to have some remarks to make through the media. And there's been all kinds of overreaction, speculation, people trying to jawbone that the Fed is going to tighten so much that they're going to raise interest rates 4 hikes, 5 hikes this year. That's all overreaction, all right? This is setting expectations, and the media has been doing a terrible job at setting expectations in the right way. They're basically overreacting and scaring everyone to the point where people are panicking. And that has driven the market down, and people have sold. And the short sellers have been winning that seesaw game. But not for long, because I think the Fed is going to come out and put some more reason into the market. They're probably going to say that they will end their tapering in March and possibly consider a 0.25% or 25 basis point rate hike in March, which would be expected and which would probably be healthy. And as I said in my 2022 forecast, I'm not seeing 4 rate hikes this year at all. I don't think we get anything even close to that. I do think we're coming into a period of time that's naturally slower. I mean, Christmas is the busiest season of the entire year, and we had the consumer going crazy, spending money early because we were all warned and advised to spend early for holiday shopping, which we did. So the shopping season started earlier and went all the way through December, and that made everything very tight in terms of supply. Now what we're seeing is that supply is loosening up. Demand has dropped because it's after that seasonally busy time of year. This is really the slowest time of year. And so demand is dropping, the supply chain is catching up. That's positive. The consumer's healthy, they're feeling good because the average home price is up about 20% year over year for the average home price, some up much more than that. And in the meantime, the stock market reacted pretty volatilely. On Monday, we saw the 1,000-point drop in the Dow Jones Industrial Average, and then a strong bounce back into positive territory. And when I saw that, I thought, okay, that is probably capitulation, and then the bottom is in, and buyers came in and bought bargains, as I did. But then on Tuesday, the markets started down again, and the Dow was down 800 points before turning around and the markets closing up off of the bottom. So here's what usually happens when you have volatility like this. Remember, we're about 10% from the all-time high. It might feel like more than that, but it's really only 10% from the all-time high in terms of the S&P 500. Now, the smaller companies, the small caps in the Russell 2000, they are actually down about 20%. So they've suffered more, but the S&P is down just 10% from its high. And what happens is when you get this volatility, you often will have capitulation where a lot of people throw in the towel, and that's when you see the market go down by about 1,000 points. And then when that happens, buyers come in to scoop up bargains, and that's when the market turns and goes higher. But what people might not realize is that you often have to go back down to test that low point and see if that low point holds. Because sometimes you can go down, test that low point, and it breaks through to a lower point. And now you have a new low, and that means the market could continue going lower. But when you have a low point and the market rebounds and then goes back down to test that low point, doesn't quite get to that low point again, and bounces above that point, now you have a confirmed uptrend. And that's what we have right now. So it looks to me like the bottom is likely behind us. We probably will get some better than expected news from the Federal Reserve today at the market close, and that could start a big rally. I do anticipate seeing all-time new highs by the second quarter, and so we are going to higher highs in the stock market, in my opinion. What does that make this? A great buying opportunity. It's times like this when you can scoop up your favorite ETFs, your favorite stocks, your favorite cryptos at bargain basement prices. A lot of the prices that we're seeing right now take us all the way back to October. The crypto markets, of course, are even more volatile than stocks. But as I explained in my last podcast, these two markets are now inextricably connected. And that means that the people that are using margin in the stock market are often using margin in the crypto market too. And so if they get a margin call where they have to shore up their account and put more money in, or if they're forced to sell in their margin account, that's going to cause more selling. And sometimes they have to sell in one account to put more money into another account. So the money goes from crypto into stocks or from stocks into crypto, whichever one needs to be shored up more. So now we see that cryptos and stocks are moving together. But cryptos are more highly volatile than stocks are, both on the downside and on the upside. So what do I expect next? I think we're going to see a big relief rally. And from these sharp sell-offs, we're going to have new money coming in, bargains being purchased, stocks and cryptos rebounding sharply higher, and I think it's going to look like a rip-roaring bull market. So we'll wait and see what happens. But that's what I think is going to happen next. I just don't think the inflation numbers are going to come in as bad as they were. I think the supply chains are getting better. That's alleviating some of the inflation problems. And once the market realizes they're not going to have a massive rise in interest rates, that is going to help ease rates. It's going to help the housing market. It's going to help interest rates be a little bit lower. It's going to help the stock market. It's just going to make a world of difference because this has all just been a narrative that has scared everybody and constricted the flow of funds in an artificial way that really didn't need to happen. But things like this do happen, and narratives and jawboning and talk and media, they all play a part in this. But what we need to do is keep our eye on the long term, keep a long-term focus on our investments and not worry about these short-term gyrations. Because overall, the consumer is extremely healthy. And since the consumer makes up 70 to 80% of the economy, well, that's where we want to put our attention. And if the consumer's spending and if the consumer's feeling good about their house value being worth more and they're feeling a little affluent, in a lot of cases, not everyone. Some people are having a very rough time, I understand. But a lot of people also are feeling very good. If their job is secure, their house value is going up, they're healthy. Now they're feeling a little bit better, and that's what keeps the economy going. So I'm not seeing any negative right here. I think we have a big relief rally, and things are about to go much higher. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.